Ladies and gentlemen, welcome back to your regularly scheduled programming. Yes, we are live in between 10 and 11 p.m. Eastern Standard Time. If it does not say live in the bottom right hand corner of your screen, unfortunately, you are watching the recap. Go ahead, click back on the main channel, refresh the page, and get on the latest live stream. Come ask your questions, come source information. Talk about what we need to talk about because, guys, stock market crash 2.0 is what it's kind of looking like right now. Okay, let me turn on the monetization and let's go ahead and click on the futures. Do I not have CNBC pulled up? That's interesting. But yeah, let's soak it in a little bit. Just Snapchat is absolutely destroying my portfolio, but it's good. How are we doing today? Ladies and gentlemen, how were the portfolios? How were the portfolios? We actually did get a green day today. Actually strung together 2 green days. So that was good. That was good. Win Lambo. Man, I'm going to have to put a lot more money in the markets, man. Eventually, it will snap, no pun intended, and turn around. But, I mean, Snapchat is not helping us get the Lambo, but soon. I think with AMC, the next couple of weeks are going to be very, very exciting. I mean, I firmly believe that. That's how I have my money positioned. If you guys have not seen the video earlier, essentially how I plan to trade this next move up in AMC stock, I think that could be a very valuable video. But premiums are pretty attractive right now on AMC, on a lot of other stocks potentially that could rally a lot. Hey brother, what's going on? June 3rd. That is the day the executive order goes back into effect. So the January rally and the June rally, you actually had an executive order that said pretty much that these hedge funds could not use Chinese securities as collateral to service margin calls. And that executive order went into effect back in January. And then the AMC tends to peak out once it's actually retracted. Like there's a huge direct correlation the last 2 rallies we've seen with AMC, January and in June. And then June 2nd was the peak of the rally, and that was the day, well, I imagine it was the next day after June 3rd, that basically the hedge funds could start to use Chinese securities as collateral again. So you peaked out the last day of the collateral ban, and then the next day when you could use those securities again, the stock fell 18%, and it's coming back into effect around June 3rd, as long as Biden or somebody else does not extend it. But I honestly think they have a lot more things to worry about than that. So I do think it's pretty promising. I do. What's up, Tyler? Let's go. We ride or die. Portfolios are dying. I love it, though. I absolutely love this period in the markets. Specifically now, like, if you didn't get to buy the dip in 08, like, you get to buy the dip now, baby. Show extended hours. Oh, I don't show the drop. Oh, no. We could pull it up like this, though. Like Snapchat right now. We're going to talk about Snapchat because it's very important, but yeah, Snapchat is down 80% from the peak. Oh my gosh. That's insane. Did it ever actually retract because we were going up anyway? The executive order, down, but not for the count. I like it. What up? Look at those numbers. Yeah, they're pretty bad. Bought some calls for Mullen for June 17th. Yeah, that could be interesting. But yeah, Snapchat really clapping the markets pretty heavy here, and it's really the statement that they made that was so alarming. Right here, Today we filed an 8K sharing that the macro environment has deteriorated further and faster than we anticipated when we issued our quarterly guidance last month, Spiegel wrote in the note. As a result, while our guidance continues to grow year over year, it is growing more slowly than we expected at this time. And it says, in April, Snap reported first quarter earnings that missed Wall Street expectations for sales and profits. At the time, the company said it expected between 20% and 25% year-over-year growth in revenue. It forecasted adjusted earnings before interest, taxes, depreciation, and amortization of between 0 to 50 million. It says, we believe it is now likely that we will report revenue and adjusted EBITDA below the low end of the guidance range we provided for this quarter. Woo! Oh, man. Oh, man, that's terrible. So they said we're not even going to hit $1 million in EBITDA. It's probably going to be a lot worse than that. And that's a big hit. That's a really big problem for Snapchat, for the advertising space, for the state of business. I mean, this is not a good sign, because if Snapchat's having bad numbers, it's not because Snapchat's doing anything wrong. It's because people are not going to be advertising as much because there's not as much demand. So we have Fed Powell tomorrow. I doubt he even pays attention to things like this, but I'm sure that he catches the vibe in the markets that, the economy is slowing down in a big way. And you're at a very weird time, guys. You guys got to know, how strange this really is. Because the Fed is raising rates to fight inflation, whereas growth is slowing down. But as the Fed raises rates, it's not fighting things that are really going to affect the consumer, like me or you, right? The Fed raising rates does not affect oil. It does not affect food. Those are the two biggest costs for families. So if you continue to see, the Fed raising rates, food prices going up, oil prices going up, then essentially the Fed is not helping the problem of inflation. They're making it much, much worse, because people are going to have to cut back on other things more and more as those prices of things you need goes up. They're going to have to cut back on other things, and then that's going to screw the whole economy. At the same time, you're still going to keep a certain level of demand for, obviously, food and energy. So I would be pretty surprised here if the Fed doubles down on raising rates more aggressive, or at this point, it seems logical they should admit that, hey, we really can't do anything to fight this level of inflation. We're seeing core CPI coming down. That's looking good. And maybe we should go a little bit slower, because at this pace, man, it's not looking good, at least for a couple of years. You've never had this in history before. But if the war in Ukraine ends, or China opens up, that could offset some of the oil issues. But man, it's not looking good. It's not looking good. AMC's crashing like any other stock. Why is AMC unique? Well, AMC's not unique in the sense of that it won't fall. Like I don't know who's ever made that claim, but I have never personally made that claim that AMC stock will not fall and the markets fall. Quite the opposite. AMC is going to fall as the markets fall, but you got to look at the bigger picture here. It's not about what AMC does on a day-to-day basis. You have to look at the overall markets. Like people want margin calls. People love shorts covering, but what causes shorts to cover, right? It's their portfolio value is going down. Sure, they make money on short positions. Their portfolios go down. But if AMC can go through a rally, if they have a bit of good news, because liquidity is super stretched right now. That's why you're seeing these wild moves in the markets. If AMC can counteract that, then you get into a situation where hedge funds, by and large, are down massively. Look at Tiger Global, look at Melvin Capital, look at all these hedge funds that are in big problems, right? Like large hedge funds. You're talking tens of billions of dollars of assets under management at these hedge funds. Not small hedge funds, very, very large. They're hurting. They're hurting. AMC, if they can get a catalyst or a reason to go up, or you get this risk on sentiment like we have gotten over the past call it week or 2 weeks of trading now, we've gotten days where the markets are pretty flat, but you'll get like AMC up 10%, you'll get SoFi up 15, you'll get Affirm up 10, you'll get, Square up 8, right? I know you guys, if you watch the markets, you look at your portfolios, you've noticed those days where your portfolio, not too long ago, my portfolio was up 6% in a day, whereas the markets were slightly negative. That's what I'm saying. If you start to see that happen, or just a random catalyst for AMC, and it can go up, they don't have as much money to service those margin calls. So margin calls turn into forced liquidations. That's the whole bigger picture here. It has nothing to do with like AMC not falling. If you want to hedge out your portfolio in a different way, which I would never ever tell anyone to do this, but if buy some oil stocks if that's what you're looking for. But AMC is not unique in the sense of it's not going to fall. Can we sell and buy at the dip? I think it's dipped. Like I talk about this all the time, so it's probably sounds like a broken record right now, but you've fallen a lot. The dip has dipped, and that dip has dipped. Like you're down substantially. In the NASDAQ, what's the NASDAQ down year to date? Still, even after today's 1.5% move up, you're still down 27% in the first 5 months. This is still the worst start to a stock market year since 1939, the first year of World War II. So just put that into a little bit of context here. The situation is so bad. If things can look up, you will see a violent rally to the upside. And my personal belief, I don't like to try to time things, so I'm getting destroyed on everything I own besides Abivai, and that's a damn dividend stock pharmaceutical company, and that still came down like 25% off its high. But you don't really want to try to be timing the markets right now, especially like the dip has dipped. Like to try to get in at like $9 when we're trading at 11, it's like it's on a risk to reward basis, it's not worth it. But and anything can happen. AMC could go to 5 if the market's like full on freak out, the end of the damn financial system. Like, yeah, very, very unlikely though. Very unlikely. I would not make that bet at all. I would not make that bet. Told you, Google was safe, bro. No lucky hat today. What will that do for AMC? I love you, brother. I love you, brother. Thank you for tuning in, all of you guys. Appreciate you guys every single day. These live streams are just fun to do. Like, you don't even make money off them. It's just something that's very fun to do. So I'm glad you guys do show up and hopefully learn something. That's what I said earlier. We are almost the worst case scenario. Some people bought at 70. Yeah, you're like, you've seen multiple compression. You've seen fear, widespread fear in the markets. Like anything that is not making a profit, or even things that do make a profit, everything has gotten beaten down, and AMC is no exception in that equation. You've pretty much taken out all of the fluff to AMC. What's AMC's market cap, actually? Oh, no, I don't want Yahoo Finance Mobile. I think it's like 5, something like that. Yeah, 5.94 billion. Like, what are the sales on AMC for a usual year is about $5.5 billion. So AMC is trading at like a 1 price to sales ratio. That would be more in line with like value, right? So it's not trading at the $20 billion market cap it used to trade at, a 4 times price to sales ratio in a normal year. You're actually trading much closer to your fundamental valuation. But then again, when Snapchat comes out and says they don't even expect to meet their lower end guidance range they just set a month ago, and that economic conditions are deteriorating rapidly, you can come into question of what's a fair valuation for anything. Like, should Apple be trading at 24, 25 price to earnings? Probably not, Let's see this thing. Squeeze. Hope everyone had a stress and drama-free day. Yeah, it was good. Yeah, my girlfriend actually just found out she was pregnant. Spoiler alert. So it was a good day. We're going to get a junior in here. I'm going to name him the Creative Investor if it's a boy. Okay? Just so you guys know. Name him Creative. Let's see this thing. Squeeze, man. I'm right there with you too, man. Man. That should be the pin comment in here. I'm gonna pin your message because we need some, I like the vibe and I like the positivity. Okay, let's see this thing. Squeeze. Can I please verify is AMC is making a W shape? I have not looked at it in that sense. Honestly, it's kind of yeah. Yeah, a little bit. Stretch out the candles a little bit, definitely. I mean, the markets usually make that kind of shape too, but man, you guys gotta know that Powell tomorrow will be very, very important. So essentially, Fed Wallard, I think Fed Wallard today. Doesn't really matter too much who it was. I believe it was Fed Wallard, though. He came out and said that he favors raising rates more aggressively than 0.5% in the next couple of meetings, but he followed it up by saying he wants to stop raising rates in September. So basically what I was saying in the videos earlier, that they want to just rug pull the markets, get inflation down, and then stop raising rates, because at this pace, something is going to break. And like, after hearing what Snapchat said and kind of seeing what is going on in real life, like if you guys drive like that, those gas prices are starting to hurt everyone in a very substantial way. So that makes me very concerned for the overall state of the economy. It makes me excited for investing and, what the potential is going to be over the next couple of years. Buying these companies now, like Snapchat at $15. Oh, I'm buying 100 shares tomorrow. I'm spending $1,500 on Snapchat tomorrow. You're buying this at pre-COVID crash lows, and the business has grown exponentially since then. You want to be a net buyer here without any expectations of forward returns. Like, you shouldn't buy Snapchat expecting to make money in 12 months or for 24 months. You should look at it like, hey, I'll probably do very well in 5 years type of deal. So it's exciting on that spectrum, but at the same time, if this continues, like, this is going to be like a 08 kind of crisis, especially if the Fed continues trying to fight fake inflation. Like, what do you call it at this point? When the inflation that I notice that comes out of my pocket or anyone else I talk about or see, it's food and energy. Like, we can reasonably deal with other inflation, right? It's not a huge deal, but things you're buying 2-3 times a week, like food and energy, that's the problem. If the Fed is going to hawk down on financial conditions and it's not going to help food or energy, we have a real problem here. And it's not something the Fed can fix. The Fed is actually creating the problem at that point, right? But again, at the so far 0.25 to 0.50 and we are in trouble. No, that's not, no, don't get it confused. The Fed has raised 0.25% and 0.5%, but the markets have raised 0.5% beyond that already. So you've really gotten 0.25%, 0.5%, 0.5%, 0.5%, and 0.5% already without the Fed doing anything. That's what the markets have priced in. Why do you think mortgage rates are 5.25% now? It's not because the Fed raised 75 basis points. It's because the markets are pricing in the Fed and they have done the work for the Fed. So don't get confused. My apologies, guys. Don't get confused on that notion of the Fed has raised 0.25%, 0.5%, what's going on here. Don't be confused on that. The markets have priced in way more than that already. Like, when I say priced in, it's not like because I've been in the markets for a long time and like I kind of know how the markets think. Like you can kind of tell what is priced into the markets or not based off the price action, based off of where stocks are trading, right? But the 10-year treasury is sitting at almost 3%. Yes, the Fed has raised 0.25 and 50 basis points. That would only be 75 basis points. This thing's trading at 2.84%, right? So just simple math here. And this is the longer end of the curve, right? 10 years, you are trying to price in like what is inflation going to be as well, right? Minus 0.75. So the markets, like I said, have raised 50 basis points higher than what the Fed has actually raised. 2.09% is what the markets are pricing in for the Fed. So that's where, you've only gotten 2 rate hikes, but the markets are 6 rate hikes down the line, or 0.25% rate hikes, right? They're 8 rate hikes down the line already. So if the Fed continues, you're going to start to get, 3% priced out. And that's where you start to get a big issue. So that's the thing. If the Fed continues to do what they're doing and they don't get food and energy down, that I think is going to be the thing that could be like a gray swan. Like a black swan is like COVID, right? In a matter of a week or two, shutting down travel, shutting down the economy, markets freak out. It was very hard to see that coming out of a couple COVID cases at first. I was kind of early to it. And, actually when Kobe had passed away, I believe, what was that? December? COVID was actually in the newspaper. I'm like, oh man, this might get pretty bad here. But it was relatively hard to see. So that was a black swan. A gray swan could be like what I just said. Like, people expect this and that and this and that, but they don't expect food and energy to stay high for, let's say, the next 12 months and even go higher, and the Fed to continue to raise as high, turning the whole system upside down. That would be very, very bad. So that's the problem. Congrats on your second kid, bro. Wow, crazy. Yeah, it is crazy. Thought I was your son. Oh, let's go, baby. Let's go. I would be honored for any one of you guys to be my son or uncle or something. I'd be like, man, hell yeah. Be like, what are you buying today? What are you buying? Son, I'm like, don't be buying that shit, okay? Buy a little bit. Don't YOLO the portfolio in it, though. That definitely explains all the fighting lately. Damn, pregnancy hormones. Pregnancy hormones. Huh? Ken Griffin, man, you are something else, my friend. I see those comments. But it's all right. It's all right. We love you. Earnings. You had Zoom today. Zoom was good to actually guide it up, but the whole thing's going to be hurt by Snapchat. Like, the whole market's going to take a hit because of Snapchat. And then the Fed speaks at about noon tomorrow, roughly, give or take. So that's also going to be very important. And, depending on what he says, I think it's pretty hard to walk the line right here. Like in a weird way, if you guys watch the videos from earlier, I'm like thinking, if the Fed does just do a big rate hike, like a 1%, the markets might initially like it, but if food and energy don't go down and the Fed keeps raising rates beyond that, the markets are not going to like it. They're not going to like it. But if the Fed does, quote unquote, like rug pull us, it could be seen as a positive for long duration. For stocks, if you're buying SoFi, or you're buying Lucid, or you're buying Affirm or DraftKings, or something that will be hopefully a much bigger company into the future, getting more aggressive rate hikes is going to be a positive thing. Faster inflation goes away, the more bullish it is for long duration growth stocks. So that's Dad. Tyler, keep dropping the knowledge. You explain the interest swing very well. Try to, man. Try to. Some people don't like it. But we try to. A good teacher needs some appreciation. Okay. I appreciate it, brother. You guys are great. Thank you. Can I be your uncle? Sure thing. I mean, wouldn't you be my aunt unless you really a guy? Huh? Okay, now we're asking questions. Now I got a lot of questions. I'll be your Uncle Young, homie. So I said they weren't with Brandon's bull. Yeah. Smash the like button. Vlog says the best. Tickle, tap, touch, or smash it, baby. We got to get ready. It's time. It's time to start buying the damn dip, man. Snapchat. Dude, 30% in after hours. Like, this is bad, too. And you definitely want to pay attention to this because they just gave their guidance in April. So if they're already saying, like, yeah, we were way off on that guidance, that's not good across the board. And the linkage between advertisers to actual demand in the markets, that's why this is going to be more substantial than not, Maybe fun rivals to invest in for the next few years. Yeah, I love NIO as a business model. Absolutely incredible business model. Like, battery as a service in China is genius. But I think it's like a long-term game of Russian roulette, because the odds of America and China in the next 10 years going to war, probably higher than I would like, right? So before that would even happen, call it a couple years before, whatever the case is, you would probably see like China delist all of their companies or something along those lines. And I just don't feel comfortable playing that kind of Russian roulette game. I might end up, buying Chinese stocks because they're so attractive with a small position, but it's not something that I would put a lot of my money into just because of that simple fact. The odds of two competing superpowers not going to war are very, very low throughout the course of history. You mean war in the next few months? I mean, what they were saying yesterday didn't sound too good. And your baby mama. Appreciate it. Ugans. Either I'm hope for $4. Sold NIO at $7 before the run. Yeah, I had NIO at like $2.50 and did the same thing. Sold a lot of it at like $5. I've been holding my stocks for a long time. I bought into Bitcoin at 14,000 and sold at 65. I think I was pretty smart. I think I was pretty smart 2 years ago. Yeah, that's a big win. I mean, that's the thing. Like the time game. Like the lower these stocks go, I think it goes without saying, but I think it's really good as a kind of reminder because people don't talk about it all the time. But quite literally, the lower these stocks go, the less risky they are. The higher your returns will be in the future. Like Snapchat at 15, like what are the odds that you lose money over the next 5 to 10 years in Snapchat buying it at $15? I know some people like say that TikTok's taken over and all that, but I see people using TikTok and Snapchat, especially younger generations. Us boomers, we might not understand. We played PlayStation 1s and fucking Nintendo 64s and shit when we were kids, or teenagers, whatever the case is. So we don't understand quite the same. I really don't use Snapchat too much, ever. I don't talk to anyone on Snapchat. So, but I have a sister and she's 16, 17, and that's all they use. They don't even use Facebook like that. So I want to bet on the new generation. And a lot of people are hating on Snapchat right now, but $15 is a massive discount. Massive discount. Fuse, is this a new girlfriend or Ling Ling's mom having a baby? It's not Ling Ling's mom, no. No. There's just too many factors adding up pointing towards a major collapse. Oh yeah, it's not good. It's not good. Major collapse. And like that's the worst part. We have already collapsed. Like we've collapsed. There's no other way to put it. Like 27% down on the Nasdaq year to date in any market is bad. Like for a whole year, but for 6 months in, that's bad. That's terrible. Yeah, what do you mean boomers? I was the boomer and I'm 62 years young, baby. You're 62. Man, you're young. Get out of here with that. I'm just playing. You ain't no boomer. What has Elon been up to? Man, getting margin called, bro. Imagine that. That's going to be the next thing. Elon got margin called. Had to sell 20 million shares. Like, fuck. Damn it, Elon. Saves the market one day, crashes it the next. It's good, though. We love Elon for who Elon is and his multiple different personalities and companies. It's good. Yeah, but right now, man, I was divorced for 5 years and had another kid with my ex-wife. Okay. So you got game. Is that what you're saying? You got game, holder of the shares. SPY needs to get around 350 or lower before we see a bottom. Oh, that's nasty. Yeah, I believe it was JP Morgan or Citi that was calling for a bottom around 340 to 360. So that would be right in the middle of what they expect. So that would be like this range. But even the scariest thing about all of it is look at a lot of stocks and they are trading under their COVID low levels. That's a real problem. And if energy and oil stay high for like years, call it the next year, we might go lower than that because you're going to kill all excess demand. If you are somebody that works a 9 to 5 and you are average income, household income, $66,000 per year, if you're paying a lot of extra money for food and gas, energy, that's going to really hurt what money that you have to spend doing other things, right? You're not going to be able to buy that new MacBook as, often as you would like to, right? You're going to be in a pretty bad scenario. And that's the big worry for me. That's the one thing that I'm concerned about is food and energy. There was actually a report that just came out today as well, that we only have planted like 30% of the capacity that we planted last year in wheat this year. Does that make sense? So we've only planted like we planted like 70% less wheat this year or some crazy number like that. And it's like if you're not seeing farmers able to like pump out new product, it takes a long time. Like wheat is not like something like a different commodity you can just make more of, right? It has to grow. That's long lasting. So that's kind of a big concern. And then obviously energy. If Russia drags out this Ukraine situation and you continue to head into summer, and then next thing you know, you're going to be in winter, and then natural gas is going to be a big problem again, right? Just like we seen last winter. It could be a really bad cycle. Like historically, every time we have went above $100 barrel of oil, we have went into a recession. So it's like, it's not a question of if, but it's like when and how long is it going to last? Because I mean, to get oil over $100 a barrel is rare enough in and of itself, but to see it like staying above 100 never happens. Ever. Never happens. Like look at the price of oil. It never goes and stays above $100 a barrel for more than like 3 months. Like '08, it went above for like 3 months. From January, it was 101. It peaked out April, so 3 months later at 140, and then the next month later, it was back down to about 100. Next month after that, a couple months later, it was crashing through the ground. So you never really seen it up here this long. And that's a big, big problem. You need to do tattoo of AMC on your chest to prove your conviction, be an inspiration for us all. Man, I feel you, but at the same time, I think we all just got a lot poorer. Like, the last thing I want to do, to be honest, is spend like $500 on a chest tattoo. But I feel you. Like, I totally catch your drift, and I'm down. Just, you know. Like, I like to get good ink, though. Like, I have a tattoo for my brother right here. I can't really pull up my sleeve. This one's for my dad. This one's the date the guy that killed my brother was sentenced. Then this one's for my brother, but it's very hard to... very hard to kind of see it. But it's quality. My daughter is a tattoo artist, so I'll get it done for free. Oh, I would be honored. That would be incredible. I would still pay her though. I'm kind of just kidding, but for real, I think we've all gotten a lot poorer on paper. Or is that just me? Like everyone else is balling out there, or just, you know? Why don't they just produce more oil? Question of the year, bro. That is the number one question. Why is it? Because these green energy initiatives, they're like, I don't know who advises the government to like what's better, but like I don't think I've heard one person lately say that we should stop drilling as much oil because of we're hurting the environment. Like we totally get it, right? But at the same time, you're hurting the human race more by making things so expensive. Like, you know what happens during recessions? You know what happens, right? Death, divorce, defaults. Why do you think people die more often? Well, they just can't handle this shit anymore. You know, they get divorces, right? They default. Things are not good. So I don't know who advises the government, and I'm usually not a very political person. I have no political incentive to say anything good or bad, and I kind of hate all politics because they're all good and bad. But dude, all they would have to do to drive down the price of oil is open the damn Keystone pipeline. That's all. Or open other pipelines. Or say, hey, the government, we are the government, and we are going to go out and drill. But, by and large, energy companies don't want to go out and start opening new rigs because they take a long time, they cost a lot of money, and the price of oil does not stay high for long typically. But that's a recipe for it to stay high longer, right? If nobody wants to go out and drill, everybody's got this PTSD about, energy not staying up, wasting money by opening new rigs, and you get a recipe for disaster. Like, that's the real problem. But, man, Biden or somebody else could just jawbone the price of oil down. That's it. They could talk the price of oil down if they wanted to. Obviously, somebody out there does not want the price of oil to go down. And they obviously don't want the stock market to go up either, because it's kind of like, I don't know who their economists are, but like this is a major problem for the economy. Like personally, I think like even other inflation will not go down as that much until oil and food prices go up, because if you're a business and it's costing you just more to do things, right? Like if you have a delivery service, if you're Amazon, you're not going to start cutting prices until oil comes down, because that's your that's your margin right there. You can't start cutting prices or not raising prices if the price of energy remains super high. Companies are not going to take that kind of hit. So what do they have to do? Energy's high, they got to raise prices. So it's like the Fed is at a very wild moment, honestly, that they want to talk about, companies shouldn't think they have price control. That's what Fed Bullard said. But they kind of do. Like, they do. They have no choice to raise prices when the cost of, their own input costs are going up, and a lot of that can be boiled down to oil and food. Like, if you were to make like just call it like a, I forget what it's called, but like just a spider web out, right, of things that are affected by the price of oil, basically everything, right? Walmart's, stores, just everything is affected by the price of oil. If it's, using oil directly, or if it's something related to transporting anything, it comes down to oil. So it's like, yeah, if oil comes down, you don't have to raise prices as aggressively. But if not, you're just screwed. So the Fed coming out here and killing all demand on top of oil and food inflation, killing demand, that's a recipe for, long-term downtrends. Hopefully this makes some sense to you guys. And it's really not to cause fear at all. Quite the opposite. Hopefully it should motivate you guys to get out there and buy some shit. But kind of to what to look forward to, right? So if energy does not go down, I'll just say in the next 6 months, the next year, then I would start preparing for something a little bit worse, or even the next like 3 months. Like the economy is very sensitive to the price of oil, because it's so fluid. You're buying it every single day, and day by day you might have less money to go out and do something else, type of thing. $19 million FTDs due tomorrow. Do we pump? Possible. Everybody better get out of there. Get out of the safe stocks. Start going to your lower caps. I'm not trying to give you. I just see these big people going down. Yeah, I just think there isn't a good risk to reward in a lot of large cap stocks. Like when you buy a stock, like, one, you should buy it for a lot of reasons, right? The fundamental valuation makes sense. You could imagine the business being bigger in the future. Like, all of my businesses, I can give you my bull case for every single one of them, right? Even my Abivi, my dividend stock. Why? Because they own Botox and Humira, the number one selling drug in the world. Botox, I don't think that's going away anytime soon. I think, if anything, people are going to want more Botox in the future, right? So there should be the simple things. The fundamental valuation, you should at least have that in mind. Like, say, hey, a stock, like, say, Snapchat is trading at $38 billion market cap at $15 per share. Well, they're not quite worth on paper a book value $38 billion. But say in the future, if they make $1 billion in profits, whatever the number is, it would be worth that. And anything after that is a bonus. Anything after that is going to be like essentially your gains in a normal market. But at the same time, you got to have your risk to reward profile upkept as well. Like with an Apple, just considering what has happened over the last 2 years with something like Apple, with I would say a majority of their demand accelerated way artificially. like way artificially. If you got your stimulus checks and you were somebody that wanted an iPhone for a long time or just wanted to upgrade or do something else, unemployment benefits, whatever, wherever the extra money came from, damn PPP loans, who knows, then you went out and bought those products. That's what you did. And that's why Apple had such good numbers. And I'm just picking on them because I love to pick on Apple, because I think it's one of the riskier stocks to actually invest in right now on a risk to reward basis. How much demand are you going to see? Like, how bad is it going to be looking at 2022 numbers compared to 2021? Probably pretty bad. And then 2023 is probably not going to be much better. It's probably going to be much worse, right? Apple, after all, was a stagnant business before all the funny money started to actually go out into the economy. So, at this point, what are the odds that Apple actually beats 2021 revenue numbers or beats those 2021 revenue numbers in 2023? I don't think it's very likely. So what are the odds of this thing trading at a 25 PE ratio? What are the odds of it actually going up 20, 30, 40, 50% in the next year to 3 years? Probably not as high as something like Fubo or Snapchat going up 20, 30, 40, 50% in the next 3 years. Like the valuations are higher, just everything. And unfortunately, the stocks like Apple, Google, Amazon, all of those, they control the broad market. So that's where it's kind of a issue for the broad markets. But need some mean tweets right now. Yeah, I would support some mean tweets right now. Just something. $140 to fill my TRX. Yeah, it's terrible. Gas was pretty high at the end of Bush's last term. Yeah, but that's the thing. It doesn't stay high for that long, like excessively high. Yes, it did go from 61 in October 2006 all the way up to 140 a barrel by April 2008, but it was slow and steady. Like, when you really got the explosion was only 3 months that we were over 100 a barrel. So it was pretty quick. I feel like we've been over 100 a barrel. Yeah, we've been over 100 a barrel for the last 5 months. 5 months. We were only ever over 100 during 2008 for 3 months. And that definitely helped cause the 2008 financial crisis, or at least it did not help. We'll call it that. Yeah, in January 2022, we closed at $100.28 a barrel. In January, hit a high of 130, low of 74, and then we've pretty much been straight up just since then. So yeah, it's been a long time. 5 months, oil over $100 a barrel is excessive. And if you're talking like another 6 months, like, imagine the pain in the economy that has been felt solely due to the price of oil. Like, you don't have to be like a genius here to see the price of oil is wreaking havoc on the economy. So that's a big concern that I have. What's your feeling on Mullen? I think it's a good risk to reward. I'm not gonna fool you here. It's not like a guaranteed moneymaker in the next 3 to 10 years. If they ever deliver a vehicle, it might do well, but it's very capital intensive to deliver vehicles. It's very hard to manufacture vehicles. The only 2 American automakers that have never went bankrupt is Ford and Tesla. Every other American car company is either no longer in business or has went bankrupt before. So especially in this market environment where it's not easy to raise capital and their share price is $1.05, they're probably going to have to raise capital at some point, and it's just one of those situations where it could pay out big or it could go to zero. So keep it small. is what I would tell like somebody in my family, right? I would tell him keep it small. You might make a lot, but there's an equally high chance that you lose it all. So it's not like something you want to put like life savings into or nothing. I don't remember that very much. I was busy being young and reckless. Yeah, no, but you know it now. You've definitely seen it play out now. 5 months is a long time to have oil this high. You can go ahead and give me a shout out. Holder of the shares. That's the guy. That's your Mullen guy. For sure. How do you feel about AMD and Nvidia? They're one of those that I think will do well over time, but they definitely have a very high valuation. You know, they're not like super cheap on a book value, like which all that means is the markets are more comfortable pricing in more growth. Like in this market environment, AMD's trading at a 35.67 price to earnings ratio. So if the markets were less confident in AMD, they would probably be trading at like a 15 or a 20. But the markets are pretty confident in AMD. You know, after all, there really hasn't been a reason to doubt AMD just because they've performed so well. You know, given like their own numbers they put out, they've pretty much exceeded all of their own numbers like every time they report. So I think it's good if you have a long-term outlook, but AMD has still went up a lot in the last 2 years. Like AMD is nowhere close to like COVID crash lows, not even in the same ballpark. So I think it's probably a matter of time before this thing flushes out to like 60, and that's where I would really go heavy in it. But to buy a position now, to start to leg into it, not a terrible idea. You know, I'm definitely not opposed to it, but I do think this thing goes down to, you know, in between 50 and 60 by the time this is all said and done. COVID crash lows were about 36, around there. Yeah, 36.75 was the COVID crash low. So that's kind of what I would not necessarily target, but, you know, 50, 60, that's very reasonable. But yeah, I do think those are both gonna do well into the future for sure. Bobby BGI and Mullen today, and some more AMC. There you go. You definitely don't want to be the generation that knows everything that owns nothing. You don't want to be those people. Top Gun doesn't get AMC some Priceline love. We should riot. Should riot, dude. You remember the riots in 2020? Man, that was crazy. That was crazy. If the shares is Freddie Mae and Fannie Mae. Freddie Mac and Fannie Mae. If Mullen license is battery tech to Tesla, as it has better range and doesn't use lithium. Owie. Cha-ching. That's true. I mean, but like Mullen will have a scalability issue. They have one factory that is like 46,000 square feet. So their production capacity is much lower than any other automaker that's on the markets that I know about. That's like a genuine one, like a Lucid or a Polestar or something, or a Rivian. Like they're very small compared to those. So it would just be a very capital intensive business to be able to like license out technology to Tesla. Like maybe they could just, you know, license out the tech like that, but they're definitely going to have a manufacturing issue. Tyler, are you going to start live streaming from daycare? Oh man. I guess so, man. It's probably not a bad idea. Very cost efficient. ABT might be a buy soon. I think everything's kind of a buy, like to a certain degree. Like I wouldn't go all in right here, but I feel pretty comfortable buying most quality companies right here. That's for sure. Like I wouldn't be scared to buy right here, you know. But yeah, that is going to do it. Ladies and gentlemen, thank you guys for tuning in. We'll be live again tomorrow night, 10 p.m. to 11 p.m. Eastern Standard Time. Get your free stocks in the description of this live stream with Weeble, Moo, and Public. I think they're giving out like 17 free shares right now. Something absolutely crazy. So take advantage of that. You got Public, you got Moo down there as well. Take advantage of all of that. Get yourself some free money. It's definitely not a bad time to get yourself that free money. If you guys want to come trade with us live in real time as well, link down below in the description for the buy and sell alerts. But that is it. You guys enjoy your day and the rest of your night wherever you are. I will see you.